So today, we're going to talk about something that's been a cornerstone of trust for generations of Indians, the post office. But we're looking at it with fresh eyes, diving into the savings schemes that are designed to help you, yes you, build a really secure and prosperous financial future.
Think about it for a second. What are you saving for? Is it that down payment on a new home? Or maybe it's making sure your child gets the best education possible. Or hey, maybe it's just about kicking back and enjoying a peaceful retirement. Whatever it is, it all starts with a goal.
And that, right there, is where the Indian Post Office steps in. What's so great is that for pretty much any life goal you can think of, they have a government-backed plan. That means it's safe, it's reliable, and it's built for you. So let's dive in and find the one that's a perfect fit for you.
All right, let's start at square one. We're talking about those crucial first steps. Options that are absolutely perfect if you're just starting your career or, just want to build that solid habit of saving money consistently. Okay, so you've got two foundational tools here. First up is the post office savings account. Honestly, just think of it like your regular bank account. You get 4% interest, an ATM card, mobile banking, the works. It's your go-to for daily stuff. But then you have the recurring deposit, the RD. This is your secret weapon for building discipline. You commit to a fixed amount every month, and for that, you get a much tastier interest rate of 6.7%.
So what does that discipline actually get you? Well, it gets you this number, 1,07,049 rupees. And get this, that's what you'd have after just 5 years of putting away only 1,500 rupees a month in an RD. That's not a huge amount every month, but look at the result. That is the power of just sticking with it.
Okay, so you've laid the foundation. Now, how do we build on that? Let's move into those bigger, longer-term goals, especially for those of us who are thinking about our family's future. This quote, it just perfectly captures the whole idea behind one of the most beloved schemes out there, the Sukanya Samriddhi account. It really is designed to be this incredible gift for your daughter's future. So you have these two heavy hitters for long-term savings. How do you pick? Well, think of it like this. The Sukanya Samriddhi account, the SSA, is laser-focused. It's exclusively for a girl child under 10, and it packs a punch with an 8.2% interest rate to fund her education or marriage. On the flip side, the Public Provident Fund, or PPF, is your versatile all-rounder. Anyone can open it, it's got a 15-year tenure, and at 7.1%, it's just a fantastic way to build up tax-free wealth for any long-term goal. So the choice is, do you want a higher targeted return, or do you want flexibility? All right, now for something really special. Let's talk about a scheme designed from the ground up to help women and girls achieve financial independence. This is the Mahila Saman Savings Certificate. It's a unique, short-term plan, just 2 years, with a fantastic interest rate for any woman or girl. Now, the key thing to know here is that it's a limited-time opportunity. You have to grab this one before March 31st, 2025. And just look at how attractive this is. If you put in the maximum of 2 lakh rupees, in only 2 years, it grows to over 2,32,000. Why? It's thanks to a solid 7.5% annual interest that gets compounded quarterly. That just means you earn interest on your interest every 3 months, so your money grows even faster. It's a really great deal. Okay, let's shift gears to one of the most important financial goals for, well, all of us, making sure we have a secure and comfortable retirement. And here's a number that should really make you sit up and take notice, especially if you're a senior citizen, 8.2%. That's the fantastic annual interest rate you get with the Senior Citizen Savings Scheme, or SCSS. It's hands down one of the best and safest options out there for regular income after you retire. So, which plan for regular income is the right one for you? Let's break it down. The Senior Citizen Savings Scheme, the SCS, is made specifically for seniors, folks over 60, and it gives you your interest payout as a lump sum every quarter. The Monthly Income Scheme, or MIS, on the other hand, is open to any adult. And just like the name says, it gives you a steady, predictable income every single month. We've covered saving for goals, we've covered generating income, so now for the really exciting part. Let's talk about schemes that are designed to make your money grow, and grow fast. Okay, let's kick things off with a scheme that has a really simple but very powerful promise. It's called the Kisan Vikas Patra, or KVP, and its entire purpose is to double your investment. Simple as that. So, of course, the big question is, how long does that take? And the answer is right here, 115 months. To put that in perspective, that's just under 9 years and 7 months to watch your money double in value, all with a government guarantee. Pretty cool, right? But what if you want growth plus a tax break? Well, for that, you've got the National Savings Certificate, or NSC. It's a 5-year plan with a very healthy 7.7% interest rate. But here's the kicker. Your investment qualifies for tax deductions under the famous Section 80C. That makes it a double win for saving money and for planning your taxes.
Now, I know what some of you might be thinking. Post office? Isn't that all about long lines and paperwork? Well, I'm here to tell you to think again. The post office has gone fully digital, and managing your savings is easier than it has ever been.
And I mean it when I say it, it's easy. You can fund any of these accounts straight from your regular bank account. You just add your post office account as a beneficiary in your banking app, just like you'd add a friend. You use this one universal IFSC code you see on the screen, IPOS 0000DOP, and then you can just transfer money using any EFT. It is literally that simple.
So, to bring this all home, think of this table as your personal cheat sheet. Is your goal to secure your daughter's future? The Sukanya Samriddhi account is for you. Need to save on taxes this year? Look at the NSC. Looking for that steady, regular income? You've got the Senior Citizen Scheme or the Monthly Income Scheme. And if you just want to double your money, no fuss, the KVP is what you're looking for. And that really brings us to the final and most important question. A question for you. Looking at your own life, at your own dreams, which one of these powerful, secure schemes is going to be the key that unlocks the future you want to build? The choice and the opportunity is all yours.